Hello, everyone, and welcome to the daily roundup. This is going to be a rather quick roundup. I had opened up the webinar for the face webinar as opposed to the daily wrap-up video, and for whatever reason, my emails that I had saved, well, they all disappeared. That was the last one that I had, so I don't know what happened, but this is a daily wrap-up. I'll just touch up quickly. I already went through actually nearly a 20-minute show, so I'm just going to touch base real quick on these, so apologies there. We've seen the dollar continue to go and stay stronger here, and the euro pair back some here. We had actually had our bias chart resistance here on the dollar index at 97.60, which is where the market ticked down to, and the ticked up to in the euro resistance at 12.47. We have seen the cable continue to weaken here, actually now at 25.39. We had support at 25.58. Covering the news, I had touched base on this a few moments ago, was that the lead for Boris Johnson continues to go and intensify, and there's a concern or the increased chance of a no Brexit deal potentially down the road. So they're pricing that in. That's why the cable continues to stay very weak. One of the markets that I touched on, actually spent a lot of time here on this, although it was on the wrong webinar, was actually here on the Australian dollar. And what we're looking for is potentially a move down to 68.31. I'd actually use the hourly charts to go back to the flash crash. So this is a key level here, the 68.31. I'm going to go and touch base real quickly on the cross rates so we can get those in place. Just one moment. Hang on. Sorry about that. So anyway, we're looking over here on the Euro Aussie, and apologies, like I said, we had some technical issues here. Once again, like I said, I'm not sure what happened, but it's crazy. All my emails to start this webinar, as well as the European crossover, have just disappeared. And I even saved myself some copies, or forwarded myself some copies as a backup, and those have gone and disappeared too. So when I started this webinar, I thought I was starting that one. But anyway, that being said, looking here at the Euro New Zealand, I just covered this. Coming up to a key level, the 73.09, which is confluencing with the 73.05, the 61%. We actually closed Friday at our best levels of the day, so the door's open for this move. But more importantly, I just want to go on and move into the Euro Aussie. And we had talked about this. I spent, once again, some time on this. In regards to the Euro Aussie, this key 63.41 level is huge. You can see it coming across. One of the things we noted here was that's a key weekly level here. And on Friday, because of the weakness that we saw here with the euro, it allowed Gravestone Doji to appear. But you can see here we're pushing beyond that. Today's bias chart resistance is at 63, 67 to 78%. But we do have Aussie data due out later today. You can see that coming up in here on the home price index. We do have that coming out at 8:30 Central, 9:30 Eastern. That will be out along with Westpac's consumer confidence, but that's going to be Kiwi data. But that may allow this to make one more push, because as we spent some of the time earlier on this, we've seen quite a bit of weakness in the Aussie pairs. We mentioned also, and we'll quickly touch base on this since it's the Aussie data that's going to be coming out. On the Aussie yen, we've mentioned here, said the death spiral continues with the potential move down to the weekly level of 74.02, and we're just a spit away from 74.02. Certainly looks like that's where the market wants to move to. Keep an eye on this as we come into the Aussie data later on today or into this evening. Once again, with the Euro Aussie, same thing with this. This thing has a potential to go in and move even higher. The only thing that's restraining this euro Aussie is because the euro's been weaker, and we've noted that the euro versus the dollar has been a drag, paring down this euro Aussie. But potentially we can go in and make another move on this here. One thing I did want to touch on, we did go over. Obviously, I was on the wrong one. Was on the guppy. And we put on here, there's no rest for the weary as the guppy appears intent on testing the 3602 level. And there it is. And same thing here. We're just a spit away. We're, what, about 19 pips away from testing this 3602 level here with the guppy. Obviously, the starting under a lot of pressure, as I mentioned earlier, obviously on the other webinar, and I'll go move into the main screen, is that Boris Johnson seems to be grabbing that lead or expanding his lead. And there's the concern that we have, is that this increases the percentages, I don't want to say likelihood, increases the percentages that we can potentially see a no Brexit deal, and henceforth the weakness in cable. We're actually looking here with the Aussie dollar, the Aussie versus the US dollar. Here's the support I'm looking for them to go into, which is the 68.31. We do have the Aussie data due out later this evening. I think that we'll probably potentially can make a push down here. But getting back to the cable, boy, this thing is just as weak as all get out. And right now we've got here 25.26. There's a level that we got right here. 25.26 for this market to push to. Boy, the weakness has just been simply pronounced. We had opportunities to try and get above this 27.40-ish area here the prior week. It kept bumping up against it, and we simply could not do that now. We've rotated lower and actually have, to a certain extent, maybe not accelerated, but we certainly have kept the pressure down here. Looking here, the last one that we'll take a look at is going to be the dollar CAD. And we did go in and regain the 33.82, and I'll mention here we had the Asian analysis, which was the dollar CAD came back with a vengeance, closing above the key level of 33.82 and above the broken trend line. Exponential moving averages remain in a sell mode. The market would require 2 consecutive closes above 34.12 for bulls to get giddy. So we'll see. It did not close above 34.12 on Monday, but it would require 2 consecutive closes above 34.12 to get this thing going. Lastly, like I said, we mentioned here on the cash dollar index, whether you're a bull or a bear, you have to factor in the risks that the Fed may. Now, they may not cut, but they're certainly setting up the table with a 70% chance already priced in for a 25 basis point cut for July. We've already had several Fed governors over the last 2 weeks mention or the idea of they were open to going and cutting. We also saw all the data has been weak with the exception of the retail sales that had come out. And I mentioned the manufacturing PMIs when I was so bearish. The dollar was because of that, is that with those manufacturing PMIs had been the worst in since 2008, and that was my concern when we were up in here. Certainly we saw a pretty good fall, but we've kind of stretched ourselves. Today's bias chart resistance is 97.60, but I think as we come in towards FOMC, you'll see this dollar ratchet back. Whether you're a bull or a bear, whether you think there's a cut, there won't be a cut, whether you think it's going to be dovish or not dovish, you have to factor in that risk. So I would look for the dollar to go in and pair back in lower here. That's all we've got. Thank you on this shortened edition, actually the twice edition back to back, but we'll see you tomorrow on the FX Daily Wrap Up.